Hello and welcome to this lesson, Bitcoin Trading versus Investing Strategy Selection Framework. So by the end of this lesson, you will understand the fundamental differences between Bitcoin trading and investing, how each approach performs across different market cycles, the risk and return profiles for specific strategies, how to select the approach that best fits your circumstances, ways to potentially combine strategies for optimal results. So let's begin. The choice between trading and investing in Bitcoin is not binary, it's a spectrum. While traders actively manage positions over shorter time frames using technical analysis, investors take a buy and hold approach that focused on fundamentals over months or even years. You see, both approaches have merits depending on your personal circumstances, resources, and temperament. Success comes from finding the method that aligns with your specific situation rather than chasing universally better approach. Now let's talk about trading versus investing spectrum. So when I first entered the Bitcoin market, I thought the choice was pretty simple. Either you're in it for like a quick profit, meaning trading, or the long haul, meaning investing. But the reality, as I've learned, is far more nuanced. Most successful market participants operate somewhere on a spectrum between pure trading and pure investing. So let's clarify what we mean by each approach. Trading in Bitcoin markets typically involves active position management, shorter time frames like minutes, 2 weeks, technical analysis focus, more frequent transactions, higher time commitment, and active risk management. But investing in Bitcoin generally means buy and hold approaches, longer time frames, months to years, fundamental analysis focus, fewer transactions, lower time commitment, and more passive risk management. The approach you choose should align with your personal circumstances, resources, and temperament. There is no universally better approach that fits everyone. Success depends on finding the method that works for your specific situation. Now let's discuss buy and hold strategy and buy and hold approach. Think of Bitcoin investing as planting a tree. You don't dig it up every few months to check the roots. You let it grow through seasons of sun and rain. The buy and hold strategy is exactly what it sounds like. Buy Bitcoin and hold it for extended periods. Ignore short-term price fluctuations. Focus on long-term value appreciation. Minimal time commitment. Lower trading fees due to fewer transactions. You see, this approach has produced extraordinary returns over the long term. Since 2011, a simple buy and hold strategy has delivered cumulative returns exceeding 800,000%. That means a modest 1,000 investment would have grown to over 8.5 million by now. However, this impressive return comes with significant challenges. Buy and hold investors have experienced drawdowns of 80 to 90% during Bitcoin major bear markets. Watching your investment lose 90% of its value requires extraordinary psychological fortitude. A trait many investors discover they lack only after experiencing such drawdowns. The advantage of this approach is its simplicity. You don't need sophisticated analysis tools, complex trading systems, or constant market monitoring. This makes it accessible to those with limited time or technical expertise. Now let's discuss what active trading of Bitcoin is, and active trading in general. Trading, by contrast, is more like being a merchant in a busy marketplace. You're actively buying and selling based on various signals and indicators. A trading approach typically involves regular monitoring of price movements, using technical analysis and indicators, taking both short-term and medium-term positions, more frequent transactions, and active risk management. The primary advantage of trading is the potential to navigate bear markets more effectively. While buy and hold investors endure massive drawdowns, skilled traders can move to cash and even short positions during downtrends, potentially preserving and growing capital through all the market phases. This active management comes at a cost. You will need to dedicate more time to market analysis, execute more transactions, increasing fees, and develop a robust trading system. Success requires not just technical knowledge, but also strict emotional discipline to follow your system, even when it feels uncomfortable. Now let's discuss trading rules of these two strategies, buy and hold and moving average strategy. First strategy that we are going to explain and discuss is strategy number 1, buy and hold. So the rules are beautifully simple of this strategy. Enter position. Buy Bitcoin at the start of the period. Hold the position. Keep position through all the market conditions. An exit rule is sell only at the end of the specified period. Now let's review strategy number 2, moving average strategy with simple moving average over 135 days. This is a more active approach using technical analysis. Enter rule. Buy when price crosses above the 135-day simple moving average. Hold rule. Maintain position while price stays above simple moving average. An exit rule. Sell when price crosses below the 135-day simple moving average. Now we'll start analyzing and backtesting and analyzing the backtest and performance of these two strategies for a period of 2018 to 2022 year. Why that period? Because it's a full Bitcoin market cycle. So let's review the backtest of buy and hold strategy for this period from year 2018 to year 2022. So on this slide, you can see that this strategy bought Bitcoin at the beginning of this period, at the date December 15 of 2018 here. And the strategy sold its position, closed the position at the end of this period, which happened at December 22nd of year 2022. And during that period, the strategy achieved over 400% profit, with drawdown calculated in this indicator, within this strategy, which is 76%. So now let's review buy and hold strategy performance for this period in details. The buy and hold approach delivered impressive 428% approximately cumulative profit during the period of 2018 to 2022 cycle. However, investors faced a severe 76.66% maximum drawdown, a decline that tests even diamond hands. This extreme volatility illustrates the psychological challenge of long-term Bitcoin investing. Many investors capitulate during such drawdowns, missing the eventual recovery and profits. Now let's review how moving average strategy behaves and its performance during the same period, from 2018 until 2022. Let's review the backtest of the moving average strategy during this period. As you can see, this is the screenshot of the strategy applied on TradingView platform, and you can see that the strategy has the simple moving average that is plotted on this chart. The blue line is that simple moving average with the period 135 day, and the strategy enters into position when price crosses above the moving average. Then we buy. Buy signals on this chart is marked as a blue arrow up. Sell signal is marked as a arrow in fuchsia color pointing down. So we buy here because price crossed this moving average, and we sell here because price crossed below this moving average, etc. And during this period, the strategy basically accumulated over 1,000 net profit with drawdown around 16%. Now let's review the moving average strategy performance in more details. The moving average strategy achieved remarkable 1,036 and 23% cumulative profit during year from 2018 until 2022, more than double comparing to buy and hold return. Traders experienced much more manageable maximum drawdown of just around 16%, significantly reducing emotional stress compared to buy and hold. This approach requires only 7 total trades throughout the entire period, demonstrating efficiency without excessive trading activity. The results illustrate how a systematic approach can both enhance returns and provide psychological comfort during market volatility. Now we'll start analyzing backtest and the performance of these two strategies for entire available Bitcoin history from 2011 until January of 2025. Let's review the backtest of buy and hold strategy during this period. So we bought at the beginning, at that period, at year 2011, and we sold at around January 2025. For that period, the strategy earned net profit around 859,000%, with drawdown of 90%. Now let's review buy and hold strategy performance for this period from 2011 until 2025 in more details. The buy and hold strategy delivered extraordinary returns over the extended 14-year period, with yearly Bitcoin investors potentially seeing around 1,000,000% in cumulative returns. However, this approach subjected investors to multiple severe market cycles, with drawdowns exceeding 80% on several occasions, at year 2011, at year 2014, and at year 2018 and 2022. In all these years, we had the Bitcoin bear markets. While the long-term trend remains strongly positive, these extreme fluctuations highlight the psychological challenges of maintaining a pure buy and hold strategy through Bitcoin volatile history. So now let's review the backtest of moving average strategy over this period from 2011 until 2025. As you see, we applied on this chart the moving average strategy, and we, in this strategy, as I already mentioned, buy when price crosses above moving average, for example, at this point, and sell when price moves below the moving average. And over this period, the strategy gained 5.8 million% and with drawdown around 30%. Now let's review moving average strategy performance for this period from 2011 until 2025 in more details. So the moving average strategy delivered exceptional performance over this extended 14-year period, substantially outperforming buy and hold strategy during bear markets while capturing most upside. Traders using this approach experienced significantly reduced drawdowns, typically 15-20%, versus 80% plus drawdowns for buy and hold, creating a psychologically manageable investment experience despite Bitcoin's volatility. Through requiring approximately 40 total trades over the complete period, this systematic approach provided clear entry and exit signals, eliminating emotional decision-making during extreme market conditions. Now let's summarize our analysis for these two strategies, backtesting results. When we analyze the period from 2018 until 2022 cycle, the differences between approaches become clear. The buy and hold strategy generated an impressive cumulative profit over around 427%. However, this return came with significant volatility. Investors had to endure a maximum drawdown of around 76%. That's the kind of decline that tests even strongest conviction. In contrast, the moving average strategy achieved a remarkable 1036% cumulative profit, more than double the buy and hold returns, while maintaining a much more manageable maximum drawdown of just around 16%. This came through 7 total trades, with a success rate of around 42%. The strategy's profit factor is around 7, indicates strong risk-adjusted performance. So now let's do full historical analysis of these two strategies for the entire Bitcoin history, from year 2011 until year 2025. When we zoom out to examine the entire available Bitcoin price history, an even more remarkable story unfolds. The buy and hold strategy delivered an astounding 859,000% cumulative return over this extended period. To put this in perspective, a 1,000 investment would have grown to around 8.5 million. However, this incredible return came at the cost of experiencing a maximum drawdown of 90%. Imagine watching your investment lose 90% of its value and still holding on. Many investors capitulate during such drawdowns, missing out the eventual recovery. So the moving average strategy generated a cumulative profit around 5.8 million%, nearly 7 times higher than buy and hold approach. Even more impressive is how it achieved these returns while maintaining a maximum drawdown of only around 30%. This strategy executed 44 trades over this period with a profit factor of around 6.1 and Sartina ratio 10.75, indicating exceptional risk-adjusted returns. Now let's discuss strategy selection based on your profile. Basically, how to select a strategy based on your specific profile. So the decision between trading and investing is not just about returns. It's about finding the approach that matches your first risk tolerance. Looking at our backtesting results, we can see how different strategies align with different risk tolerances. If you can stomach a 90% drawdown for potential 859,000 returns, buy and hold might be for you. If you prefer more moderate drawdowns of around 30%, while potentially achieving even higher returns, then the moving average approach could be more suitable for you. Many traders abandon solid strategies during volatile periods because the approach did not match their risk tolerance. Your strategy should let you sleep at night. If you're constantly anxious about your positions, basically you cannot sleep during nights thinking about your positions, you've chosen the wrong approach, regardless of its theoretical performance. Another aspect of your profile is time commitment that you need to analyze. Your time commitment. The buy and hold strategy required just one trade over the entire test period. Perfect for those with limited time. However, don't underestimate the emotional time commitment of holding through severe drawdowns. The moving average strategy with its 44 trades over the full period demands more regular attention, but provided better drawdown protection. So basically you need to spend more time actively monitoring it and trading. Consider honestly how much time you can dedicate to your Bitcoin investment. Less than 1 hour per week? Then consider buy and hold or very long-term trading strategy. If it is from 1 to 5 hours per week, then longer-term trading strategies might be appropriate. If it is more than 5 hours per week, you can commit to your Bitcoin trading or investment, then more active trading approaches become viable. And next aspect of your profile, of your trader profile, is technical expertise, the level of your technical expertise. Our moving average strategy, while relatively simple compared to many trading approaches, still requires understanding of technical analysis principles, chart reading skills, proper trade execution, position sizing, and risk management. The buy and hold strategy is technically simpler, but demands deep conviction in Bitcoin's fundamentals and exceptional emotional discipline. So be honest about your current skills and your willingness to develop new ones. Now let's discuss the hybrid approach, the way to combine strategies. Throughout many years in crypto markets, I've discovered that many successful investors and traders actually combine both approaches. Given our backtesting results, this makes perfect sense. You could, for example, use core and satellite approach. In this approach, you maintain 70% of your Bitcoin position as a long-term hold. You trade 30% of your position using a more active strategy like the moving average approach. This would have captured most of the Bitcoin buy and hold returns while reducing overall position volatility, portfolio volatility. This approach allows you to participate in long-term growth potentially of Bitcoin while still taking advantage of trading opportunities and providing some downside protection during bear markets. Another approach is time-based split. In this approach, you use buy and hold for multi-year positions. You apply active trading for medium-term opportunities. This approach allows you to maintain long-term exposure while actively managing some risk. The time-based approach can be particularly effective for those gradually transitioning from investing to more active trading as they develop their skills and confidence. And another hybrid approach is capital efficient combination. In this approach, you hold spot Bitcoin for the long term. Use derivatives or leverage for active trading. This maximizes capital efficiency while maintaining exposure. By using derivatives for trading positions, you can maintain full Bitcoin exposure while deploying less capital for trading activities, potentially enhancing overall returns. Now let's discuss how to make a choice, a practical framework. Based on our analysis, here is framework to help you select your right approach. Step 1. Self-assessment. Answer these questions honestly. How much time can you realistically commit each week? What is your technical knowledge level? How would you react to seeing your portfolio drop 50%, 90%? What are your primary goals? Capital preservation, growth, income maybe. Step 2. Strategy alignment. Match your answers to the appropriate strategy. Limited time plus limited knowledge plus can't tolerate big drawdowns equal modified buy and hold strategy with some defensive rules. If it's more time plus moderate knowledge plus can tolerate moderate drawdowns equals trend following strategy like our moving strategy. If you can afford significant time, dedicate and commit significant time, plus you have advanced knowledge, plus you can tolerate calculated risk, then you can select more sophisticated trading approaches. And step number 3, implementation plan. Start with position sizes that match your confidence level. Document your rules clearly before entering positions. Set a regular review schedule. Quarterly is often ideal. Gradually increase complexity as your skills develop, as you gain experience. And remember, the best strategy is the one you actually follow consistently. A theoretically optimal approach that you abandon during market stress is far worse than a good enough strategy that you maintain through all market conditions. And now let's discuss key takeaways from this lesson. Both trading and investing strategies have proven highly profitable in Bitcoin markets over long periods. The moving average strategy outperformed buy and hold in both test periods while maintaining lower drawdowns. Success depends more on strategy fit and consistent execution than choosing the best strategy. Understanding your own psychology and circumstances is crucial for strategy selection. A hybrid approach combining multiple strategies may provide the best risk-adjusted returns for you. A regular review and adjustment of your approach ensures continued alignment with your goals. This is the end of this lesson, and I will see you in the next one.